Hey guys, I'm the Newb investor. Today, I'll give you my 3 best semiconductor stocks to buy in 2022. I handpicked these stocks because of their high profit margin or high free cash flow yield in a year. I love Intel, but if the markets continue to ignore this company, the stock is going nowhere. That's why I'm looking to holding 2 to 3 semiconductor stocks in my portfolio as kind of a hedge against Intel. I'm going to be brutal, but you won't see NVDA and AMD here in this video, simply because it's too dangerous to buy and chase them at these high prices. If you had bought NVIDIA and AMD before the COVID boom, I think you're in luck. But if you're buying now at these prices, I wish you luck. But if I were to choose between NVIDIA and AMD, I choose NVIDIA over AMD as they make more money in terms of their revenue. Please know that I only pick these stocks because of their shining financials and none of their fundamentals. So if you're looking to buy these companies, please do your own research. My first semiconductor is SWKS, Skyworks. If I run this through my first metric, you'll see that it's trading at 2 times earnings. It's kind of expensive, but it's still within my range of 3. For growth stocks like this, you might want to assign a multiple you're comfortable with. With SWKS, I am comfortable buying this at 1.5 to 2 times multiple. Actually, this applies to most growth stocks because most growth stocks lag with their EPS as prices or PE soar before their number of shares catches up. In my second metric, you'll see why I handpicked this stock. Looking at that strong profit margins and free cash flow yield of 25% in average, almost consistent over the years, it's just very attractive. Take note of their revenue. It's small, but there's more room for growth. It is actually trading at 0.74 times discount right now, compared to 1% of the money they're making. In the third metric, also trading at discount at 0.88 times, compared to when the stock was valued before by the markets. The stock beats 2 of my 3 metrics. The only risk I have about this stock is their revenue growth. I can almost say that it's a young company, looking by the revenues. I'm looking to buying this stock at 14 to 16 PE, just to price in my risk of the revenue growth and margin of safety. My second semiconductor is AVGO, Broadcom. It looks expensive, and it is expensive. That's why I'm not looking to buy this stock now, but I'm waiting for them to split the stock. First metric, it is trading at 2.58 times earnings. Now, this is expensive but still within my range of buy. I handpicked this stock because of the free cash flow yield. Look at that, 40% yield. That's why it's trading at high PE. If we use 40 to divide the current PE, it will be trading at discount, but we don't want to buy this at 40. So I took 23.48, their net income yield. To divide the current PE, we'd get a discount of 1.65 times. We'll be overpaying at this assumption. Next metric, historical PE. It's trading at a discount compared to how it was valued by the markets before. AVGO only beat one of my metrics. This is why I'm not buying this stock, but definitely it made it to my watch list. I'll be waiting for them to split the stock, and from there, I'll reevaluate. My third and last of my semiconductors is TXN, Texas Instruments. In the first metric, it looks expensive, but still within my comfortable buying range. Now look at this net income and free cash flow yield. This is why I handpicked this stock. Easily high 30s of yield and only currently trading at 20.17 PE. What a discount for a growth stock. Looking at their historical PE, it is trading around the normal PEs. TXN beats 2 of my 3 metrics. But again, it's because the EPS lags for most growth stocks as the price soar before them actually buying back the shares. To conclude, these are my 3 top semiconductor stocks and my entry PEs. I'm looking to buy TXN first before the other 2, and I think I'm buying near the current prices. I don't know, but I'll buy it at a discount the markets will permit. I want to cover these stocks 1 year from now, a year from then, and so on. I could be wrong with these stocks, but guys, the numbers, they don't lie. As long as the fundamentals don't change drastically, I think the stock should do well based from the current numbers. I'll update you when I bought the stock or when I'm nearing to buy these stocks. But right now, they are in my watch list. I'd be on the sidelines waiting for the best entry prices. If you're looking to invest in these companies, I'd advise you to look at a higher time frame of 10 years of data or more. Also look into the other metrics like long-term debt, current ratio, etc. As always, do your own research.